let's go ahead and dive right in. I had to hit record on the recording here. So welcome everybody. Looking at my screen right now, I got the heat map pulled up. We do see a little bit of recovery. We got Microsoft up almost half of a percent, Apple up 0.28%, Google up 0.5%, Meta, Facebook almost up 0.25%, Tesla up 2.5. Again, energy's running. Of course, the market in general is still trending down. So looking at the SPY chart here, currently trading for 373.79. I've personally been looking for some put opportunities. Basically, when the market is trending down, what we want to look for is when we get a little bit of a pump or a rally. That's where I'm looking to open my short positions or my put options. Okay, so I typically like to wait about the first hour. As you can see, it was very choppy. The SPY was very choppy in the first hour. Looked like it wanted to go down for the day. Then it pumped up a little bit around 10 a.m. And then it came back down again. So a little bit of a whipsaw action in the morning on SPY. Then, of course, after the first hour went by, we did kind of get a trend for the day, which is basically trending down, right? So I can go ahead and draw a resistance line here. Let's go with the extended line. Now, I don't usually count the first hour, so let's go ahead and draw the trend for what's been going on right now. And as you can see, this trend line here, let me go ahead and make this a different color. Maybe we'll go green with this. See if you guys see that line there. I know I got some Fibonacci levels from previous price action, but we're looking at this green trend line right here. As you can see, it's hit this trend line quite a few times already. 1, 2, 3, and 4. So I'll be watching this trend line to see if maybe we get a pop out of the trend line to the upside. We could possibly play calls if that happens. We're kind of running out of room here. This is kind of like a descending triangle here. So we got this red line here. It's going to be the support, which is basically the low of the day. And then we have this trend line moving to the downside here, forming this descending triangle. So a couple things can happen here. Price action can break to the upside of this trend line. And like I said, we could possibly do calls if we see a retest and it goes up. But as this lower end of this triangle keeps getting smaller, that's when we know something's about to happen. It's either going to pop up to the upside or it could break the support. And, we could do put options there. Matt, I see your questions here. I don't get any of this. I thought you guys said the stream is for beginners. That's okay, Matt. If you have any questions, let me know. I was just going over what the SPY's been doing today, and we can go over some more basic stuff if you want. Again, we're looking at the heat map. Got a kind of mixture of stocks selling and a mixture of some stocks gaining. But of course, overall, SPY's down about 0.18% right now. So kind of flat. SPY is an exchange traded fund, and it basically mirrors the S&P 500 index. Okay, so that's what the SPY is. You can trade the SPY with options, or you can actually buy shares of SPY if you want. So that's what SPY is, and it's an exchange traded fund, and it goes off of the S&P 500 index. Okay. So yeah, and if you don't know what any of this stuff is, maybe enroll. In the premium section that we have a 22 class education course, kind of builds the foundation of your trading. So if you do end up in the premium section, just make sure you enroll at the Penny Boy University. And I believe just for the premium section for stocks, I believe it's $50 a month. And then if you want the options premium section, I believe it's an extra $25 a month. You said, here, take my credit card. All right, so I know I was trying to get back to some more basic stuff, but I just want to show you what's going on with SPY right now. and we had this descending triangle. We got the support, and sure enough, it's breaking out of this triangle and trying to move up to the upside. So if we do get a retest of this trend line and it pops up again, we could probably do call options there. But I did want to go over some of the basic kind of market sectors that have been running here. This is a great handy little website here called barchart.com. You don't even need a premium account. They just have a free account you can sign up for. And this is where you can get the trending sector information, either whether it's for the day, or you could do the last 5 days, you could do the last month if you want. And then of course you can do year to date and see what's going on in 2022 for the year as a whole. And as you can see, the S&P 500, it has all the major sectors. So, we got energy, utilities, consumer staples, basic materials, which is gold and stuff like that, metals and stuff, healthcare, industrials, financial sector, real estate sector, IT, communication services, and consumer discretionary. The difference between consumer staple and consumer discretionary is basically what it says, that the consumer staples are, a lot of the big companies that sell basic need items, like food and clothing and stuff like that. So, you got Walmart and Target and stuff like that, and consumer staples, Coca-Cola, things that people are going to spend money on no matter what the economic conditions are. So a lot of times we do see consumer staples will be higher on this sector list when the market's in a downtrend, because people might consider this like a flight to safety area, these top three here. Of course, at the bottom, consumer discretionary, this is exactly what it means. They're discretionary products, so things that you don't really need. So these are things that you would spend extra money on if you had extra money. A lot of the vacation stuff and stocks like that are in consumer discretionary. It's basically stuff that you don't need, but they're basically wants, not needs. So that's the difference between staples and discretionary. Just keep your eye on that, because they usually run opposite of each other. When the market's doing really good, see consumer discretionary start trending up, and consumer staples might go down. But when the market's trending down, you see a lot more money coming to consumer staples, because this is basic need type stocks, and then consumer discretionary will go down. And as you can see, for the year to date, S&P 500 almost 22% down for the year. Of course, energy. I mean, if you made a bet on energy the beginning of this year, as you can see, you'd be up quite a bit, because we all know energy has been soaring. Okay, gas prices are up, and of course, when that happens, and couple that with inflation, energy is going to do quite well in those scenarios. Utilities, even though it's down for the year, it hasn't really got hit as hard as everything else that you can see down here. Specifically, information technology, IT's just taken a massive beating this year. They're down almost 30% as a sector in general. So a lot of people, and we know technology is not going anywhere. So there's a lot of undervalued tech stocks right now, just because of the beating the tech sector has taken this year. So there's lots of big money and hedge funds that have their eyes on some of these really undervalued tech stocks, because they know they're not going anywhere. So what we're doing is basically just waiting for some sort of bottom. So far, we have not gotten a bottom in the market yet. So, I mean, looking at the SPY here, I'll pull up the daily chart. And again, Matt, you were asking earlier, what is the SPY and stuff like that. I like having SPY on my watch list, because this is a good indicator of how the market is doing. Okay, so let me just delete some of these drawings. I day trade SPY almost every day, so I have lots of levels plotted out here. But let me go ahead and delete it all so you can see, just in general, what the SPY looks like. So on this chart here, you see this massive sell-off, excuse me, in March of 2020. That's when COVID hit. Okay. Let me just check YouTube real quick and make sure I don't have no questions. Okay, good to go there. So March of 2020, this is when COVID hit, and you can see we got hit really hard then. After March of 2020, you can see this bull run we've been on ever since. So the remainder of 2020 and a big portion of basically all of 2021. So the rest of 2020 and a big portion of 2021, you could see we were just in a monster bull run, and that was after COVID hit. You know, we were in a lot of parts of the country were in lockdowns, and the market in general was still running. I mean, of course, we got some pullbacks here and there when COVID cases kind of ramped up a little bit, but you can just, I mean, there's really not a justification why it ran so hard when we were in the middle of a pandemic. So I think we're kind of paying for a lot of that stuff right now. And as you can see, here's the end of 2021. Basically, it was like almost, let me zoom in a little bit and I'll tell you. Yeah, this was January 4th. So a couple days into the 2022 new year, we actually ended up hitting an all-time high with the market in general, with SPY. And then as you can see, it's just been so volatile for this year. You know, it's already June 14th, year's about halfway over, and you could just see the volatility we've had. We were in a downtrend for January, February, and maybe half of March, and we hit a low right here in March, and we started recovering. You know, and a lot of people got their hopes up when this happened. This was a good 2 weeks of trading, and the market in general was trending up from March 15th all the way to March 29th. So it was a good solid 2 weeks. People were getting real excited, buying leap options and call options. Let me just check this. Okay, cool. So, you know, a lot of people were getting excited these last 2 weeks of March. We thought we were out of the woods. And it just turns out that we definitely were not out of the woods. Supply chain issues started happening. You know, well, I mean, they've been happening, but the media kind of swept it under the rug, and they weren't really talking about supply chain issues anymore, and it kind of went quiet with that news. And then all of a sudden, it's back, right? According to the news. So definitely lots of companies having major supply chain issues. That's why we saw a big sell-off in Target and Walmart, because they're still having supply chain issues and that kind of thing. So definitely not out of the woods. And then, of course, the Russia-Ukraine war, you know, couple that with rising interest rates. I mean, you know, there's a lot on the plate of the U.S. economy right now that we're dealing with, and you know, we're paying for it right now. So it's going to be up to the Feds to adjust rates accordingly. You know, hopefully not doing it too quickly to cause us to fall into a recession. If that happens, we could still see some more downside with a lot of different sectors, because of course in a recession, no one's really buying a lot of stuff. Demand goes way down. The cost to borrow money is super high because of the rising interest rates. And we've you know, the federal government has put us in a situation, and we can't really, you know, place the blame on the federal government. And I'm not going to get into politics, but of course the COVID pandemic had a lot to do with what we're going through right now as well. So there are forces, you know, outside of our control, you know, and it's how we recover from here. So as you can see, we had bad CPI numbers. Just came out about a week or so ago, and that's what's caused this additional gap downs that we're seeing here. The previous all-time low for the market for SPY ETF was around the 380 mark right here when it dipped down to 380. We've since gone lower than that, so now we're making lower lows for the year of 2022. Again, as you can see, this was in January, made a low here. Had a little bit of a pump, made another low here. This is when we had our, I want to call it a bear market rally, which means, you know, it was kind of like a fake out, like, You know, a lot of people might have got caught into some call options or something at the top here, but just kind of like a relief rally that we had, and then of course moving forward in time for May, and then towards June, you know, we're still making lower lows here, and then we just made another lower low. So a little bit concerning with the SPY. So you know, if we can hold this low that it just made today around 372, this is kind of something we're looking for here as far as a trend, to make sure we don't go any lower. But you know, we could also make another trend line, maybe like we could probably call it like right around here. So, you know, we need to break this top resistance to kind of get out of this bear market. And as you can see, we have a long way to go. So let's just keep our eye on things like that. We need to remember, you know, what the market's doing in general. And a lot of us right now in the premium section, we're day trading. We're day trading the downside. That's what I was telling you earlier. It looks like we got a little pump on SPY going on right now. But what we're doing is we're capitalizing on the downside by shorting stocks and also doing put options. And then we can take those profits and use those profits to pay maybe for some ads in some blue chip companies, something that, you know, we're going to hold 3 to 5 years or more. So it's a good strategy that's been working for the past couple months. And we're taking profits from our short positions and our put options, and there is opportunities to go long and do call options while we're day trading, so we can make money both ways. But basically we're taking the day trading money and we're using that to pay for ads in some of our retirement accounts, or maybe we can use those profits to buy some leap options. You know, you could get a 2024 leap option on one of your favorite companies and use the profits from day trading to buy those. So it's not really costing you anything, right? So those kind of strategies is kind of what we've been doing a lot of lately, and it's just because of all the volatility. You know, of course, we do have a direction. We're going down, right? We're in a downtrend overall, but you know, going long on stocks or swinging stocks for a couple months or something like that, you know, you've really got to like these companies a lot, and make sure you do your DD and check their financials and stuff like that. But you know, swing trading for you know, a month or two, that, you know, those kind of plays are just not working out right now, because we keep seeing lower lows. So you don't want to find yourself in a situation when you're trying to swing a stock and you make your entry, and then all of a sudden the market in general makes another lower low, and now you're down. You know, you could be down 20% on that swing trade, you know, within a week. So you got to be careful with the short-term swings and things of that nature. And that's why what we're doing is you know, it is a good time, I think, to add to some blue chips, you know, anything in your retirement account. Walmart's at some pretty good levels right now that it seems to be holding. You know, Apple seems to be at some good pricing right now. Of course, Amazon just did their forward split. They were trading in the 120s after their forward split, and you know, they've since come down. They're trading at 104 right now, which I think is a great deal for this company, because you know, before the split, well, I mean, what happens is after the forward split, they're going to adjust the prices on the daily chart for the new price. But as you can see, you know, Amazon did have a potential to get into the low 100s before they did the split. Then they do their forward split, and look, these are the levels we're testing right now, these low 100s. So this could potentially be a triple bottom if the market starts to recover from here. But I personally think Amazon's a good buy right now. You know, this isn't financial advice or anything, but I just like to let you guys know what I'm doing, you know, for education purposes and stuff like that. But to pick up Amazon in the low 100s right here, I think it's a great deal. We do have a green candle forming on the daily, so it looks like buyers are starting to step in at these levels. So this would be a good blue chip retirement deal there. And then, of course, you know, cruise lines are down quite a bit. I know Carnival Cruise Line has a bunch of debt and stuff that they carry. Personally, if you want to go with a cruise line for long term, because they are at such great levels right now, I would probably go with Norwegian Cruise Line. They just have um, better balance sheets, better fundamentals. Um, I just like them. You know, they don't have as much debt as Carnival Cruise Lines. And as you can see from this daily chart here, you know, we're almost at, you know, COVID lows here. This is where COVID hit and made a low of $7, bounced straight up, and then it held, you know, basically kind of made higher highs from there, hit 7, went up to 8, then went up to around 9, and then just started making higher highs for the remainder of that year. But as you can see from the daily chart, you know, we're getting back to those levels. I mean, I personally bought a bunch of Norwegian Cruise Line right after COVID. I bought some and bought quite a bit of it actually. I added to my position anytime there was a pullback, and ended up doubling my money with my Norwegian position post COVID. This was after the COVID news hit. And as you can see, we're getting back to those levels now. So, you know, might be time to start building a position in Norwegian again. You know, anything in the 10, 11, even $12 range for Norwegian, I think is a great price for this company. And then, of course, even if we pop back into this channel that it was in for about half of 2021, and obviously this year, it's been trading in this channel. So I think if we can pick up some shares down here in this $11 range, and it does want to pop back up into this channel, well, as you can see, you know, even if I let's see if I can move this channel out a little bit. Okay, it'll just let me go out to right here. But even if it does pop back up to the top of this channel, I mean, that's going to be 19, 20 bucks a share, maybe 18 to 19, 20 bucks a share if it does recover. And you know, that could be an easy play right there on a cruise line. So there are some great opportunities out there. Again, you know, if it's not a company that you don't mind holding for the long haul, just be careful with your swing trading. And you know, you got to be careful with that stuff, and make sure your first entry is very small, because if you go in too heavy on a swing trade in these market conditions, you know, you could end up being down, you know, 10, 15, 20%, you know, pretty soon after you start it. So just make sure your first entry is very small. And then that way, when we do find a bottom in the market, we can go ahead and add a bigger buy at that point once we get some stability, and then you'll have the best possible average moving forward. So let me just check YouTube real quick. Okay, oh, we got a couple people watching, but I appreciate you guys tuning in here. It's about 1:30 p.m. It's been about 30 minutes. Does anyone have any questions or anything they want me to go over? Just type it into live stream chat, and I can pull up some other charts. Maybe some people are looking at Microsoft or some of these other bigger companies like Tesla or something. But yeah, I mean, even after I end the stream or whatever, doesn't look like we have any questions right now. So I've been told I do a pretty good job explaining things. So maybe I just answered a lot of questions and maybe thoughts that you guys had. So all right, yeah, that was a great stream. I'm gonna go ahead and end the recording here. This is Trading Tips with the Swinging Bull. And again, if you guys think of anything after I end the recording, feel free to send me a DM, and I'll get back to you guys right away. All right, other than that, I hope everyone is well, and I'll see you in the next stream. Have a good day.